want to talk a little bit about extended waves. So you'll recall those tend to happen the most in wave 3. Sometimes they happen in wave 5. Rarely do they happen in wave 1. So here's 1, 2, 3, 4, 5, and then your ABC that comes afterwards that corrects the motive wave. So which is the 1 through 5. So the extended wave is where you see 5 clear waves within the main wave. So here's wave 3, and I've shown in blue the extended wave 1, 2, 3, 4, 5. So there's 5 extended waves within this wave 3. Then there's a 4, 5 after that. So with extended waves, it tends to be when there's a lot of momentum happening in the trend. There tends to be a lot of good news happening. There tends to be a lot of awareness of the stock. Many times it'll be getting a lot of good positive press. The trend followers are finally aware that the trend is up rather than down, because remember, they find out late. So right in here is when they're most apt to realize that the trend has changed rather than way down here. So they're going to be more apt to be more bullish. Therefore, they're going to be more apt to buy the dips and add to dips, and that tends to make extended waves shallower and shorter than the traditional larger waves. That's another way that you know that they're extended. So here's your traditional waves. Your 1, 2, 3, 4, 5, A, B, C. Notice how much bigger all those swings are than these pullbacks that are within here, for instance. So investors and traders are super bullish on the asset at that time, and so they just won't let it drop down near as far before buying it up. And so it tends to be one of the highest volume times when you've got the extended wave, whether that's wave 3 or 5, and again, rarely wave 1. So you really won't have to look for that too much. And in stocks, more times than not, it is wave 3. Again, occasionally, if you're in a bubble or something like that, it'll be extended wave 5. In commodities, it'll usually be wave 5 that tends to be more extended than wave 3. So anyway, that's it really on extensions. But again, it is a very bullish phase. In wave 3s, you're able to hold on longer. To make more in profits and to hold more of those. Keep in mind too that if you're fearing a 3 or if maybe you feel like, oh, maybe I've miscounted, maybe this is a 5 rather than a 3 or whatever. If you have any doubts along those ways, you can always dial down your risk. So as this 1 happens, you've got 5 waves up. You know that the trend has likely changed. But if you want to wait for confirmation of that, and you want to pull back anyway to get a better pricing, you wait for the 3-wave pullback. Then there will be 5 waves within wave C. So you wait for that, and then again, you're probably not going to call the bottom or whatever, and that's fine. It wouldn't even matter. Again, you could get in at 16, 15, and 14, and it goes to 11, and you still got a great average break-even price. And then, as it goes up, even if you don't, like when you feel you're pushing it in wave 3, or maybe you don't feel like you'll know when the end of wave 3 is, you can just start peeling off shares. So this runs up from an average price, let's say of 15 up to 23 or 25, and you want to sell half your shares. Then if you start to be wrong and this starts to come back down on you, it's doing it at half the pace that it was on the way when you went up. So don't feel like when you're learning to count waves, like I've got to get this exact, I've got to know this exact wave count, this exact number. You just kind of, it gives you a flare for where you're at within the trend. And then so once the extended wave is over, you have a 4 or 5 that happens after that. So there's one more last hurrah that happens, and then that's when things get toppy and dangerous, and you're subject to a steep decline. So you have a heads up ahead of time that will happen. When you see the 5 waves of wave 5 happening, to know to be out of that before this next big move from 30 to 20 in this instance happens. So you can maximize a lot of the upside. You can afford to stay in the trend longer when you're in the extended wave and feel more comfortable. The pullbacks will tend to be shallower anyway. There's usually a lot of good news, a lot of good volume, a lot of good momentum. And so you got in early way down here, and everybody else is pushing your shares up through this wave extension, and the bullishness and the sentiment couldn't be better. So you've really got the wind to your back in these extended waves, and so that should give you a little bit more confidence when you're trading or investing as well. So when you're on long-term charts, obviously you're investing, but if if you saw this move on an hourly chart or 4-hour chart, you're trading because you're doing something short term. So there's wave counts on every time frame, and you can count these waves within waves as well. So for instance, there's 5 mini waves within here, 3 mini waves within here, 5 major waves within 3. There happen to be 3 pulled back here in 4, and 5 waves up here in 5, and so forth. And you've got, of course, wave structures for your ABC as well. So anyway, hope that helps, and thanks so much, and God bless. Bye-bye.